Test. So welcome back to my channel, Chandler's Retirement Live. I'm Chandler, and today's live, we're doing a couple of things, right? So I just wanted to talk for a minute here before the market opens. Got about 2.5 minutes. Just the purpose and the goal of my channel, right? I started it not so much to make money, but rather, to create a legacy for myself. Um, I'm 65 and not sure how much longer I have in this world, but what I'd like to leave behind is just a legacy for my kids, my kids, my grandkids, and maybe my great grandkids, because they'll probably be the only people that will listen to me or remember me when I am gone. So my goal for my channel is to create just engaging videos that kind of document and share my life journey. So one of the things that I do right in my life journey is most days is, I'm up in the morning and watching the markets. Right, I trade options. I've been doing it for quite a while now, and also I spent around 20 years as a human resource manager, human resource director, working for various companies. And that's after I retired from the military up the rear, spending about 23 years in the military, in the Army, retired, got my degree, my master's in human resource management, and then went on to do the HR stuff, right? So here I am just trying to document, my life journey, what I do. A lot of times people ask, hey, Robert, what do you do? What do retirement people do? Well, this is one of the things that I do, right? When I get up in the morning, I'm watching the markets, drinking my coffee, eating some breakfast. In the markets, there's a lot of dead time because you're waiting for a setup, right? You're waiting for a setup to happen before you make a trade. Sometimes you don't even make a trade, all right? Most of the big moves come overnight. And so there's a lot of waiting. You have to be really patient and disciplined as a trader. And so one of the things that I thought that I would do, which is what I normally do, is, my mind wanders as I'm waiting for a setup. And what I start to think about or work on is my YouTube stuff, right? My YouTube videos, whether I'm doing editing where I'm thinking about a um, a specific setup, or when I'm thinking about content, what will give me more views, more watch hours, those kind of things. Uh, and I'm trying to gain more watch hours. And I was told that, doing lives will probably get you some watch hours. And you know what? I, I'm good. I can try anything. And so I'm trying that. I'm going live most mornings because I'm already trading the market. So I'll just push live and go on live. And if somebody wants to watch me trade, I have no problem with that. They can do that. Um, Let me see here. As the market opens up, all right, got a big gap up. Um, I think one of the things, my disclaimer that I need to really say is that I am not a financial planner, nor anything that I say in here is financial advice, right? Um, I don't recommend anything. I don't even recommend people doing day trading because you'll lose money, right? You will lose all your money if you don't got the experience, the years and years of experience behind this. It's not worth it. There's no easy mode when you do trading. Your best bet is to seek out a financial advisor and get some good financial advice on what to invest in. But definitely. People need to invest so that when you do hit my age and you want to retire, you can do that. You can retire, and you have that money saved to help support your retirement, right? If you draw Social Security, it helps, um, meet those gaps where you might have a health issue at that time, and so you're looking to fill that gap or pay for those things that Social Security won't pay for, because Social Security alone won't. You can't survive with just Social Security. You need to have something else. So you need to have an investment. Uh, Savings is great, but savings don't accumulate wealth, right? Putting your money where it accumulates wealth is what you need to do, and part of that is investing. It could be, housing. A lot of people do it with housing. That's still investing. Uh, so just keep in mind that this is for entertainment purposes only, not financial advice. Don't take what I say as financial advice. Don't try to copy my trades because you'll lose money. All right, I don't want you to do that. Uh, so my plan is to kind of this morning and most mornings now that I go live, it's just to bounce back and forth, um, to talk about the markets, kind of see what it's doing, because I do want to make a trade, and I'm trading right now the SPY, which is the S&P 500. I'll either trade the SPY, the S&P 500, or the Qs, right? The QQQ, which is the Nasdaq 100. They're more your tech stocks, either or ETF. I'll trade. I usually like to trade because you can make money in the market going up or going down, either which way. It's just where you put your bet, right? And so for me, I prefer to buy the market rather than sell the market, and so I'm always looking for the stronger of the three. ETFs, which is your S&P 500, your Nasdaq, or the Dow, right? But the Dow is only 30 stocks, right? The 30 top tier stocks that are out there, and so I usually don't trade the Dow. Let me see if I got to do anything else for my disclaimer. No, but today's topic, what I'm talking about from the HR side, has to do with if if you're thinking of retiring in 2025, how do you notify your employer of your intent to retire? And that's the HR side that we're going to talk about. And that pretty much applies to somebody else, or, if you are thinking about quitting your job and finding another one or doing something like that, it'll apply to that as well, right? Just not retirement. But I am focusing on talking about retirement. So the market just opened up, and you could see, there's a big gap up, right? And we always say with gaps, gaps, they always close gaps. Sooner or later, the gap will close. Might not be today, right? Might be next month, next couple of months. You don't know. But this gap that I just highlighted, that'll fill in at some point. It has to come back and close that gap. As you can see, there's multiple gaps on the chart, right? And that's just the way it works. Most of your big moves happen overnight nowadays. And so as it happens overnight, just watching the market. So as it happens overnight, yeah, if you're in the market, that's great. If you're a bull, if you're wanting it to go up, but if you're like most people, probably the last couple of weeks, people thought that the market was going to break, was going to crash, and you see that all over YouTube, right? The market's going to crash. The market's going to crash. That's clickbait, right? Nobody knows what the market's going to do. Everybody is just looking at levels, and so they did. The market was at a point where if it went down any further, it could have turned into a bad bear market, and it could still do that. But if you think about it, I'm just watching the market as I'm talking. If you think about it, with the new president coming in and all the hype that he's talking about, the market could take off even a lot higher than what it currently is. But if you look over the whole world, man, there's a lot going on, right? From Israel to Russia and Ukraine to China and Taiwan, you name it. There is so much turmoil. So much noise, what we call it in the markets, right? That's just all noise, because a lot of that will equal to positive things for the market sometimes. And so we're just watching, right? So the market opened up, it gapped up a whole lot, and I'm watching the SPY again. It gapped up a whole lot, and it's just trying to settle in. So normally I don't trade within the first 15 minutes. Because you can get chopped up, meaning you could buy into the market. You think it's going to go up, then what does it do? Well, it goes up high and it comes back down, and then you get chopped out. So, anybody that puts in a bid or buys into the market, there's always a stop order, meaning that if the market goes down to a certain level, you're trying to get out, right? You gotta stop there, because if you don't have a stop, and the market takes a big hit, and you could lose a whole lot of money there. I'd rather lose a little bit of money, and then if I'm wrong, you can always re-enter, right? You can always re-enter. That's never a problem. Let's see. And so I'm just watching the market here to see what it wants to do. Yeah, messing with my stuff here. I want to hide certain things. Do VWAP. That was the other one, probably. So again, when we talk about with the market, it's constantly going up, constantly going down. And so you're looking for your setup. Now, what I normally trade, I trade on the 1 minute, right? There's different time frames. I trade on the 1 minute. Most day traders will trade on the 1 minute. Get this done here. Oops. Yep, they'll trade on the 1 minute, and then let me edit this study. I think it's down here. Okay. There we go. I trade on the 1 minute time frame. I watched the other time frames, meaning I got multiple charts, right? But I can only share one, where I'm watching all three indexes, as well as other indicators, and that's always fun. That's always fun to do, and it's for me, it's a lot of fun to watch the market because that's a real life thing, right? It's always fun to watch the market, see why or where it's going and what it's doing and why it's doing something. The market's always going to a spot, right? On a chart, it's always going somewhere, right? It's the market's job to fake you out before they give up their hand and let you know where they're going. So right now you can see it's just trading in this narrow range. So if you bought and it went up to here, you're still not making no money, right? And if it comes back down to here, you might lose money, right? Because that's where your stop is probably going to be. It's going to be at the low, right? It'll be at the low of that. So I'm just watching this and taking a look at that. Let me get a sip of my coffee, water my mouth a little bit. Good morning. Good morning. Yeah, I see there's somebody in. Are you going to do anything this morning now, moving forward? Yeah. Can you hear me? Is my mic working? Test. Yeah. Okay. So yeah, I'm being heard. This is my first real live that I'm doing, and so I'm working on that as well, right? Trying to get better at doing these lives. And so your question is, are you going to be doing? Are you going to be doing this morning? Okay, going forward, moving. So in the markets, I'm waiting for a setup. So what I trade is I trade the double tops, double bottoms, lower highs, lower lows. Right. So you're always looking for that setup. There's so many different types of setups that people trade. You pick one or two or three, and you become very familiar with those type of setups. And then you're just waiting for those setups to appear on the chart. And once they appear, they give you a better probability of it being successful. So here, what you can see is that the market's it's opened up, right? It's already gapped up big, right? So if you're a trader and you bought options or even you bought the market um, on Friday, probably now you're looking at it and you're saying, yeah, this is probably a better place for me to sell, right, than to buy. And so you got a lot of people that are selling the market right now, right? They're making their money. And so it takes a little while for the market to kind of settle down. But you can see that it's starting to break out a little bit. Um, Now, I look at it, the market's goal is to get up to 601, right? On the SPY, to get up to 601. If it's going to be a positive market today, that's its goal. Now, if you're a bear and you think that the market ain't going to get there, then you think the market's going to come back down and close there where this blue line is. It's going to close below that, right? And so that's the struggle, right? That is the struggle for today. So you look at that and you say, okay, so where am I at? Well, you're kind of right in the middle right now, and we have a saying in the trading, right? You don't diddle in the middle, right? Simply because you'll get chopped up. As you can see here, if you thought, okay, we're going to break out, and what this line, that's the 20 the daily 20 moving average, right? That's a powerful moving average. The blue is the 50. So what happens is it comes right here on the VWAP. You thought, hey, the market's going higher. Well, you bought in. Guess what? It came up to here, and you thought it's going higher to the moon to 600. Then it starts to come back. All right. Uh, and just depending where you put your stops, you get stopped out a lot. So now the market's going to turn, right? And I keep thinking that's where it's going, to 600. What would make me buy in? Well, yeah, I got to see a bigger pullback. I got to see a way bigger pullback than what it's given us right now, because what it's given us right now is not enough for me to make any money. All right, if I jumped in now, um, the chances of me getting stopped out are greater, because I don't know what it's going to do. But we're right at the 15-minute mark, and usually, again, I wait 15 minutes before I even start trading, right? And this gives the market a chance to kind of settle in, as well as there's normally news that comes out that our time here is 8:45, right? Eastern time, 9:45. Usually when news comes out, and news have a tendency to move the market one direction or another. And it don't matter what the news is, right? I don't listen to it. I try not to trade while uh, they're putting out the news, because a lot of people use that to move the market one direction or another. So I just wait for it. So I usually wait. I say usually because there's times when I'll jump in, but normally I don't even trade the first 15 minutes. And so whatever that information that's coming out, you can see it's trying to push the market higher. And so I'll just let it do its thing. Again, a disciplined trader is one that has patience and can wait, because if you get FOMO, and that is the fear of missing out, that's when you lose money, right? And so your goal is not to lose money. Your Some people's goal is to make money. Other people's goal is to just not lose any money, not lose a lot of money. All right. And we talk about risk management. And that's why every time I do a trade, I have a stop. And that stop says, you know what, if the market goes down to here, it'll just automatically sell. Yeah, it's volatile, especially the first thing in the morning. First thing in the morning, there's a lot of volatility, right? The market's moving. And that's, again, when it gaps up that high, what are people doing? Well, if I had call options, I'd be selling right now, right? I'd want to pocket my money and look for the next trade. And that's what a lot of traders do. And that's why you see the market go up, come down, go up, come down. Now, this might be what they call a gap and go, meaning the market gaps, and instead of trying to fill that gap, right, come back and fill that gap, it's just going to continue going higher. And we talked about it going higher to somewhere around the 600, 601. That'd be my best guess, and everything is a guess, right? You have no idea, right? It's just a guess. But I said that's kind of the markets go, right? Is to get somewhere around the 601 mark, right? If it's going to go higher. If it's not going higher, then it's going to go lower. It needs to fill that gap, right? Come all the way down to that solid blue line. So what do? I just watch, right? Um, because what else are you going to do, right? You can't just jump in and hope, or buy and hope. That's not a strategy. You buy and you hope and you think, and then you lose money. Man, that's always a terrible thing to do. So you're just looking for your setup, right? And once your setup happens, and you buy in and you make money. Again, some days I don't trade at all, simply because there's not a good setup, right? There's not a risk to reward setup that I know the probability is on my side, and I can make money. Like right here, I might think that yeah, it's going to 601. All I have to do is buy a call and hold on to it. I could do that, but nothing on the chart is telling me that that's what I need to do. No, I don't use the canceling method. Um, long time ago, I used to subscribe to them. I used to have some of their charts. Um, but every time you learn something about the market. It's always in your mind, and so those patterns is something that you're always looking at. IBD, yep. Do I review, or do I look at the paper, or I think they even have a channel that you can listen to? No, you know what? I don't listen to um, anything while I'm trading, right? Because a lot of times that's distraction, right? I mean, if you're going to be a trader, you got to be focused. You got to be focusing on the market, understanding, what the market's doing, where it's going. It's difficult. It's hard. It's almost as hard as trying to run and be successful on YouTube. YouTube is difficult. I know we say it's in the easy mode and it's something easy to do, uh, but for a lot of people, it's not. For a lot of people, they pull out content and they don't get any views, and they're trying to understand why they don't and why some people get views. And it same thing as trading. Some people can come in and trade and buy a call and make $1,000 and get out and say, yeah, I made some money. And you say, how did you do that? Well, luck has a lot to do with it as well. All right. um, I'm not a lucky guy, and that's why I wait for my setups to happen. And so yeah, luck has a lot to do, right? So um, some people prefer to be buy and hold investors. That means, just buy the SPY, buy the S&P 500. So most companies, most brokerages, that's what that's their benchmark, right? Is to beat the S&P 500. So if you just bought the S&P 500, then you're probably going to do as good as the market's going to do, right? Whether the market wins or loses within that year. So, I always subscribed when I was younger. Uh, was dollar cost averaging, right? Every time you got paid, you bought some more stock in the S&P, right? Whether it's up or down, you just bought, so that because you know that yeah, I'm just looking at the messages here. You know that the market over time is going to go up, right? It constantly goes up. You look at any chart of the market, and it continues to go up. So if you hold for 5 years, then you're probably going to make money. And so the best bet is over that 5 years. Every time the market goes down, every time it drops 1%, 10%, and you say, "Oh, this is crashing. It's a pullback." That's the time to buy. I always say that that's the time when stocks are on sale. Most people get scared and they pull their money out of the market, and then what happens? The market goes back up, and then they go, "Man, why did I do that?" And then they got to buy back into the market if they're going to make money. So your best bet is have a longer horizon, and just do dollar cost averaging, right? Uh, every time you get paid, put that money aside, and on the first of every month or the 15th of every month, pick whatever day you want, and you just buy into the market, right? Over that 5 years, over that 10 years, over that 20 years, you're going to make money, right? The U.S. economy, the U.S. markets, they're not going straight to zero. That's not going to happen. So your best bet is to be disciplined and just do that, right? And you don't have to worry about it. Then you can focus on not what I'm doing, right? Not trying to figure out how to make a dollar, uh, but you go back to your work life, whatever job you have. You could start focusing on getting promotions and making more money, and or you're doing side hustle things like um, YouTube. That's what you focus on, right? Trying to make some more money and invest that money so that over those 10, 20 years, 30 years, you have a big nest egg. And then when it comes time to retire, you can retire and you have the money to retire. So many people that are retiring nowadays, and they just don't have the monies, the finances to keep them in their average life or their normal life that they were living prior to retiring. Uh, I'm just fortunate enough that I retired from the military, so I get a pension plus my health care, my benefits there, and they're really good, and they take care of a lot of that, and that's probably a retiree's biggest expense, because as you get older, you start to break down, right? You got more problems. Um, you're from Alexa's group. Yeah, I'm not sure who Alexa is. Yeah, I'm not 100% sure who that is. Um, what software is? Oh, so I trade on Thinkorswim, right? They were sold out. They went to Schwab. Schwab has them now. I don't know if they're doing a better job than TD Ameritrade was, but I like Thinkorswim. So I started with them a long time ago, and you get used to the software packages that they have, and yeah, I know there's others that are out there that are even faster, right? Faster executions. But I'm just so comfortable with their software that I prefer just to stick with them. So I'm good there. So that's Thinkorswim. Yeah, Alexa's group from YouTube. Oh yeah, okay, yeah, yeah. You're talking about from school, right? Alexa's group from school. That's a great group, right? In school, yeah, that's a great group. Bunch of uh, you know, uh, I want to say small content creators, right? We're all trying to figure out how to get monetized, how to make money, how to do great things with YouTube. Um, and we're all in there together. We're all in there trying to figure it out. And there's some people that are doing really good. If you recall, what's his name? Mike Bear, I believe his name is. Uh, his channel has really taken off, right? And he's the 81-year-old guy. His channel is really taken off, and he's only made a handful of videos, but then he had some he had a couple of videos that went viral, and that his site's just taken off. Uh, yeah, so my live is going well. Like I said, this is my first live that I'm doing. I would encourage anybody and everybody, um, to do that. I just made a video the other night, last night that is, and I was focusing on YouTube in the easy mode, and I went and I did some research, and I kind of studied what all those content creators that believed in the easy mode, and what they were saying, and how they're doing, because their channels are blowing up too, and they're not doing a whole lot, right? They're talking a whole lot about YouTube. That's about it. And so I did a video on YouTube in the easy mode. I'm trying to figure out, what concepts are they using, and I'm gonna, for the next 7 days, I'm gonna try to make videos based on their concepts, right? Based on what they believe. So I'm definitely gonna do that. Uh, because it's working for them. And if it works for them, people like Dodash, right? If it works for her, it can work for anybody. Just like if it works for Mike, if old Mike can create a YouTube channel at 80 and then at 81 be successful, monetize, anybody can do it. You just got to figure out what works for your audience. That's the whole thing, right? Figure it out what works for your audience. And so that's kind of what we do. And so, from what I learned was that going live was one way to get those watch hours, because getting 1,000 subscribers is not too hard, not too difficult. Now, getting your watch hours, now that is difficult, right? You got to get people not only to come to your channel, but to watch your videos. So if you make a 10-minute video, you want them to watch 10 minutes. But a lot of times what they'll watch is they'll watch the first 2 minutes. And then if they're not interested, they'll move on. And most people, their attention span is very short. So if you don't have a strong hook to keep them watching, they'll go, right. They're not gonna hang there, because there's a thousand more channels that or videos that they can go watch. And that's what people do. And it's the same thing as trading, right? People jump in there and they get FOMO. They go, oh, it's going up, I need to buy. And then they buy, and then the market turns around and goes the other direction. And then they go, oh, whoa, I'm losing money. This thing sucks. Yeah, well, that's why you, as Mike did, right? He said he spent 3 months learning YouTube and how to make a channel and build a channel and run a channel. Same thing with trading, right? If you're going to trade, especially day trading, and you got to learn it first. You got to spend several years trying to understand the markets before you even do anything. All right. I never encourage anybody. I don't even like taking money from family members, right? If somebody in my household said, hey, can you invest this much dollars for me and make me some money? Well, I hate to do that, because you can lose their money. And if you lose their money, man, they'll never talk to you ever again. But they don't understand that, right? They don't understand that you can lose money trading, just like YouTube. If you do YouTube, well, you could spend all your days and you spend money buying cameras and software programs and microphones and you name it. There's a whole bunch of things that they're always selling, telling you that this is what you need if you want to make a bigger channel, or if you want your channel to grow. Or there's a lot of people that are selling content or selling courses. I'm gonna sell you a course and teach you how to do that. Yeah, I don't offer courses. I don't sell anything, right? I don't even ask people to buy me a coffee. On school, I mentioned that one time. I said, do you beg for coffee on your videos? And I know some people, they're all looking to get money, to make money any kind of way. And one way is you could do the Amazon affiliate, where you can make some money if they use your link to go into Amazon and buy things. And in my household, we buy things from Amazon all the time, if not every day. And then you got the buy me a coffee thing, right? Where I don't know, YouTube I think takes half of that, if not more. So that's not good as well. It's always difficult. I've always said that if I needed to make money, I'm going to go back to work, because I know I can work and I can make some money, and I'm not going to lose money by going to work. Although I don't need to make no money right now, and so I don't want to work. Right now I'm retired, and so this is kind of what I do, at least to about 11:30. About 11:30, that's kind of when I stop, whether I make a trade or not. I stop at 11:30, and then I do the same thing the next day. But once I stop, then I go into that next mode. I try to do something physical every day, right? So, especially in retirement, you gotta do something physical to keep your body in shape, as well as your mind. And you can see just trying to trade, trying to run a YouTube channel, that keeps your mind engaged. Um, do you use put options for shorting? Yep, yep. Just depending on which way you want the market to go. And let me show you. Let me see if you can see this. Yep. So there's my options chart, right? So not our chart, but these are the options. On the right side are your puts, right? And the left side, there's your calls. And you can see right here, that's your strike price. That's where you think the market's going to go. Now, since, I day trade, I look for a delta, and this is the delta, right? I look for a delta right around 70, right? I'll go like 66. If I was going to buy, that's what I'd do. I'd come in here. I'd say, okay, 66. That's what I want to get. Matter of fact, I'm going to go ahead and move this. And right now, that's trading for a $1.98. All right. Oh, now it's trading for $2. So that's going up. So I would use this, right? I look for a delta of right around 70, because I'm never in a trade very long. I don't hold any trades overnight, because you can see what will happen overnight. You might be in a trade and then overnight it gaps up or it gaps down, and they're always taking your money. So I'd rather just try to find a setup in the market during the day and make some money, right? If I think that setup is real strong, then I'll buy 10 contracts. 10 contracts will make me some money. And, I can get up to $1,000, $2,000 sometimes, just depending. And then there's times when I'll just trade one contract because the setup is not that strong, but I do want to get into the market. So I'll buy one contract and let it go. And I can make $50. $50 will buy me a meal at McDonald's, and I could be happy, right? I could buy my wife a Big Mac and we'll be good to go. Are you in and out by? Yeah, I'm in and out by 11:30. I'm usually done because I don't want to sit here and stare at the market all day long. At one time, that's what I used to do, right? You sit here and you watch every tick, every move, and you're trying to figure out where it's going and where's the best place to buy, right? Where that level is. And so you would watch it all day. But man, that's a lot of sitting. That's almost like, going to work, right? Sitting at your desk and doing whatever they have you do. And so, by 11:30, if I haven't made a trade or made money, then I usually punch out. I'm done. I'll come back and look at the market and see if the market made or went to where I think it was going to go. Like I said, I think it's going to go at least 601, right? Or it's going to close the gap and it's going to come down here. We'll see. We'll see what it's doing. Right now, it's riding the 20 moving average. And we'll see what it ends up doing. I know most people, they just want to see you trade, and I understand that. A lot of times I want to trade because I want to make some money. I want to get into here and say, okay, this is the perfect place to buy. If I bought, I could probably make some money there. But if the market is not moving a whole lot, and remember, this is a shortened week. I think Thursday the market's closed for Jimmy Carter's funeral, or President Carter's funeral. But I lost my train of thought. So if I haven't made a trade by 11:30, yep, I'm usually out. But I leave my monitors on, and so throughout the day, depending on what I'm doing, I'll come back to it. I'll take a look at it. There are times late in the day where I'll see my setup coming up, or I'll see my setup forming, and so I'll jump into a trade then, and that's not a problem, right? But right now, I mean, again, I don't want FOMO. What I'm waiting for is I'd like to see a real big pullback. Now VWAP, right? That's to me, I lose a VWAP. If the market is trading above VWAP, then it's positive. If it's trading below VWAP, then it's negative, right? So that's kind of like a medium, kind of like your average. And so you see it continues to make higher highs, right? Now we're at 598, but it's not moving fast, right? And that could be because it's a shortened week. I don't know. I have no idea. Do you stay once you buy until you sell? Yeah. So when I buy, whether it's a call or a put, I always buy with a strike price. I mean, not a strike price, with a sell price and a stop price. Uh, and usually I'd go a quarter. So if the market go against me 0.25, then it automatically sells. So just depending on how many contracts I buy, you know, um, that depends on how much I would lose. And I also set a sell order for, 50 cents for 0.50, so that if the market went up that high, it'll automatically sell. So if I bought 5 contracts, I'm looking at making $250, and or I'm going to lose $125. Now, a lot of times, if I buy in and that market is screaming, it's squeezing and it's moving higher, higher, I can adjust. I can move that. I can move that sell order up higher to where I think it might go. Right, make some more money that way. Now, I try not to move my stop orders, because every time I move my stop order and the market keeps going down, I'm losing more money. And I'd rather just sell, get out, wait for the market to find the level that it's happy with before it starts to turn, and then I can always buy back into the market. Right? That's never a difficult thing. So those are both my stops, which is 0.25, and then my sells, which is 0.50, right? A quarter and 50 cents. And that's what has worked for me. If I hit my stops and I lose, the $125, I'm good with that. That's no, it's not going to make me go broke, but it's going to stop me from going broke, right? So yeah, I'd always say if you're going to trade, always have your a stop order in there. That will save you. And so it looks like the market is building, right? It's building some strength right there at the 20, right there where it's yellow, right? The yellow arrows are just above VWAP, right? It's building strength, and it's usually takes a little while to build strength before it makes its next move. So you can see that the market went up to here, right? It hit that once, it hit that twice, a lot of times the third time, and that's when it takes off. But you see it's building, so that would be a good place to buy, right? If you're going to buy calls, you could buy right there, believing that it's gonna go higher, at least to that 600. But you don't know. That's the whole thing. You don't know. And the market can easily pull all the way back to this pivot point. And then everybody that bought, that thought that 20 was a good place, that 20 was support, that breaks that support, that's usually where everybody has their sell orders. So that's what the market likes to do, right? It'll hunt for your sell orders, and they'll say, okay, everybody's got sell orders there. Yeah, I'm just going to go all the way down here, hit everybody's sales orders, then turn around and come back the other way. So that's kind of what I look for, right? I look for that sell their sell orders being hit. Let's see, if neither has happened by the end of the day, do you sell or do you let it ride overnight? No. So the options that I buy are 0 DTE. So it just means that they expire. They expire today. Now there are some times when I'll buy the week options, right, that expire on Friday. But if I'm day trading, then I'm just buying the options that expire at the end of the days, and that's where you got to keep that in mind, because the longer you hold the option, right, it starts to lose its value. Even if the market's going up, it starts to lose its value. All right, so I always look to get in and to get out. So I don't worry about any of the other Greeks because they don't matter. Delta is probably the only one that I look at, right? And I always want to buy something that's close to the 70 mark. And so if I'm going to buy, it's either going to hit my sell or it's going to hit my stop order, one of the two, before the end of the day. Yeah, there's times when I buy and I'll let it ride, but I know that the longer I let it ride and it's not hitting my sell order, uh, I just know it's like, yeah, that's not going to work out, right? It's not going to work out. So at this point, I'm looking at the market, and yeah, it looks like it's going to go up to 600. It looks like now it might come and touch the 20 again one more time. But you can see, I mean, you could draw a trend line, and if I was to draw a trend line, it would look something like this, right? There's the trend, and it's going higher highs, but it's for me, it's just going so slow. It's just really not moving. And you can see, there it goes, starting to come back. Now, if you buy options, that expired today, you gotta sell, right? If you buy it, whether it's a put or a call, you got to get out before the end of the day. Otherwise, your broker, Schwab, they'll sell it by the end of the day. And normally you can go to the end of the day, and then it stays open for options about 15 minutes after the market closes. And a lot of times when the market closes, that's when they like to make moves, right? It'll close, and then most investors are locked out or gone for the day, and for that last 15 minutes, then it'll move up or it'll move down, right? It'll take people out. So again, I'm just I mean, there's nothing else to do right now other than watch, and that's why I say that as a trader, you got to be disciplined. You gotta understand yourself and the emotions of saying, "Oh, I'm gonna make money. I'm gonna make money," because then it'll definitely turn in the other direction, and that's what the market does. It's supposed to do that, right? The market it's there to take your money. That's its ultimate goal. So again, where would a good place be to buy? Well, you can see, I can see, and everyone can see that the 20 is where it has a lot of support. So if it came down to the 20, which is now getting close to the VWAP line, that might be a good place to buy in. So we're coming up on the 1 hour from the market open. And usually the 1 hour is, I call the 1 hour flip, right? After 1 hour, it flips, and the market has a tendency to go the opposite direction, or it can continue on and go higher, and that's what people utilize as a buy-in, right? Wherever that 1 hour mark is, they'll market, they will get right there. That's the 1 hour. So that next candle, if it breaks and it goes higher, they get in. Now these are 1 minute candles. Now when I buy in, I like to buy in at the second half of the candle. So what I mean by that is, a candle is 1 minute. So I don't buy within the first 30 seconds simply because what I have noticed is that the market goes one direction or the other within that 30 seconds. And then for the second half of the candle, it goes the opposite direction. All right. It always fakes you out, just like here. So it's, yeah, I'm going down, I'm going down. Then it fakes you out. You're thinking it's coming back down to here, and then it doesn't. What does it do? It turns right around. Right. So there are multiple things that you can think about, or that you see, you watch, and you learn. Um, do you sometimes jump back in at the end of the day, just before close? Yeah, with the options, it becomes a problem, right? Because at the end of the day, what the options are doing is that they're starting to lose all its value, right? Because uh, they're trying to get the options to go to zero, right? And you got a lot of people on the other side of the option trade, right? If you buy, someone's selling to you, and somebody is selling to you, believing that option is going to go to zero. So if that option goes to zero, they make that money, right? Uh, there was a time when I used to do that I would just sell options, all right? Sell it to all the people that had FOMO, and you could make a lot of money there, all right? Um, so there's always two sides to every trade. So I don't like to trade closer to the end of the day, and what's closer to the end of the day. Well, you can kind of see, you can take a look uh, at your options, and you can kind of see the pricing, right? And you can say, okay, yeah, it's losing its value at this point. Yeah, there's no even if the market's going up, there's no reason, because it's not going to go up that high. And so end of the day, I mean, there's been times, there's been, especially when you have earnings, right? If there's earnings coming out, and with earnings, it's almost like gambling, right? 50-50, because you have no idea whether they're going to have good earnings or bad earnings. Then you have no idea whether good earnings are going to be good for the stock, or not good for the stock. So I mean, there's been times where I bought into to Apple, all right, because just based on past performance, Apple sells off, something like that. Apple sells off, so I'd buy some calls, believing that Apple stock was going to go down. I can buy deep in the money calls for the next day, and you can make money that way. There's a lot of strategies that you can utilize when it comes to options, right? It's just crazy. Once you get into it and you start learning, there's so many. It's just you gotta pick whatever one you want, whatever one that you want to try, and then you watch it, right? You try to you buy, and if it doesn't work out, you try to figure out why it didn't work out, and then you go from there. All right. But you got to pick a strategy. Again, my strategy is, I like to buy double tops, double bottoms if the market's going down. Uh, Really, double bottoms, I just love, because that's probably where I made most of my money. Now you can see it's making another higher high, right? Another higher high. Um, and so it's going the direction that we thought it was. Now, if we thought if we thought that this was going to be um, a double top, where you can see that where it made a top, it's come back, up, it hit that same double top a little higher, right? But now it's turning back around. Let me see if I can get this better. You got that, you get that gap up, and it just does things to your chart. So you can see there where it hit that double top, right? And so now, what do you think? Well, you know what? People are looking, oh, that's just a pullback. and they believe that it's going to go up higher. Remember, we said probably 601, and that might be true. This could be just a fake out to where it is getting people that are FOMO, right? They're thinking, oh, now here we go. Now we're going to crash. No, we're not. So it'll come back. It's going to try to get back up to this back up to the high, the 598.87. All right, and you see, there you go. So a lot of people thought that the market was going to go down, continue to go down, and it's not. Yeah, so well, buying puts or calls at the end of the day, they all go to zero, right? They all go to zero. So it don't matter on because when you buy a strike price, you're saying that if I bought the 600 strike price for the market for the SPY, I'm saying that before the end of the day, the market's going to get up to 600. All right. Now, if I bought a strike price at VWAP there where it's 597.50, then I'm saying, okay, so the market's going to get to that point, right? And so if the market just diddles in the middle right here, guess what? Both of those, the put and the call, they'll be worthless by the end of the day, right? Because I haven't made it to that point. Now you can buy the 599, all right, 599 call and say, okay, by the end of the day, it's going to be higher than 599. And that might be true, but will you make money? That's the problem, all right? Because the market's going to go back, it's going to go up, it's going to go down. And every time it goes up and it goes down, that gets adjusted, right? The value of that option constantly changes. That's where your Greeks come in. And so that's why I say when I trade, it's my belief that the market's going to go straight up from whatever point I buy or straight down from whatever point I buy. And then if it doesn't do that, well, I'll just get out. I'll just get out and I'll wait for another setup, right? So right here, I mean, we said that the probably the only place that I would buy is if the market came back down to the 20, came back down to VWAP. I would be interested in possibly buying. But now, does it do that? I don't know. So it hit once, hit twice. Now it's its job to get back up here and make a third time. Now, if it doesn't, right? If it doesn't have the strength, right? If there's not enough buyers to push that back up here, that says something. That's another puzzle piece for trying to figure out where the market's going. And so all those that bought short here thinking, no, the market's going to go down. Well, it didn't. It hasn't. The market's real strong. All right. It's really strong. But those are, we talk about the algorithm with YouTube videos. The algorithm kind of can work with you or it can work against you based on what you do. Well, there's kind of like a rhythm with stocks as well, right? The algorithm knows if there's too many calls, too many puts, because that plays into a lot of it. Let me see here. Okay, so right now you could see here on SPY, there's like a 1,278 plus thousand calls against puts, 1,500,000. So there are more puts right now than calls. So people believe that the market is going to go down versus up from this point. Or people are not sure. They could be getting out of their trade, and that's why it's going up or down. But you see how, as I indicated, it went straight back up, right? Straight back up to to that high. Now, does it break down, or does it break out and keep going to that 600, 601? Or does it take a peak above and then come back down? You don't know. And so if you don't know, then, that's not a reason to buy. Because if you got FOMO and you jump in, man, it go right against you. And that's why there's just a lot of waiting. Now you have a lot of scalpers that would understand the market a lot better. And what they'll do is, they'll buy it here. Something will tell them to get in, and then they might get out right here. But they're buying a lot of options, maybe 50,000 options, and then turning right around and selling right here, right? And making their money. That's a strategy. Not mine, right? Okay, as you can see, it's getting rejected again, right? 1, 2, 3. This is what they call a look above. We went right to 599, almost. And let's see if it's going to pull back. So, I mean, you could be right now, you could be at the top of the market, getting ready to turn. We just hit, remember I told you that the 1 hour mark is usually a flip. So we just went into the 1 hour mark. It changes to a 1 hour candle, right? So this is the 1 hour candle. That's what it's done. And so you can kind of see that at the 1 hour mark, it kind of flipped. Looked like it's going down. Like might want to go down. Don't know. That's why I'm always worried about that 1 hour flip. So it hit 3 times. It hit the top 3 times, and now it's coming back. It's coming back down to our trend line. So that's the market structure right now, right? So for me, that's market structure. It's going higher. The market's going higher, right? Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, equal lows, higher highs, higher lows, and it keeps doing that, right? Until we hit this 1, 2. Now you made a higher high, but it's coming back. So let me see. Where would I be concerned about a lower low? Probably down here. Well, the first one might be here because that's a low, right? It went down. And let me kind of mark this, right? And we'll make that color. So the market could easily come back to that mark, right? And here's another one. Come back to this mark. Ultimately, come back to VWAP. Come back to the 20. That's on the downside. Now, remember, keep saying that I'm looking for the market to go to 601. Although I'm not in any trade right now. If I was in a trade, you would see it on here, right? You would see the trade on there. And so I'm currently not in any trade. Just nothing that I see. Now, this is a gap and go, right? So it gapped up, then it just kept going. Now, a lot of traders would say, okay, you know what? I'm going to buy on that first pullback. Yep, I would agree with that. that's a chance. That's a chance you take. You can come back and say, okay, there you go. I'm going to buy that and just hold, right? And yeah, you would make some money if you knew that. Now, the market could have easily at this point went up and then just started coming all the way back. It could have easily did that. So there's a chance there. So you're always looking at probabilities, right? What's the probability that the market's going to continue higher? What's the probability that the market's going to go lower? Well, I think this week, don't know. Uh, but the probability is probably that it's going to go higher, simply because the presidencies are turning over. Um, there should be some news right out there that I think they're supposed to certify the votes today, and I've seen a lot of chatter online. They're talking about how they weren't going to certify it, and there's going to be a whole bunch of stuff going on. So I don't know, but if something bad was happening, you'd see it in the market. You're right. The market wouldn't be going up this high if there was some bad things getting ready to happen. Yeah. So I don't believe none of that. So that's the markets. I'm just waiting. You can see where I draw that line, where I said that the market, if it was going to come back, it's probably going to come back here. And does it make a lower low now? So do we come up here? That's normally what it does, right? It comes up to a point. All right, then you can see it start to churn. We hit it once, we hit it twice, we hit it 3 times. It's come back. Now from here, does the market go higher, or do we start to put in lower lows? We start to go down, right, from the 1 hour mark. Do you use the volume at all in your decision making? Do I use volume? Well, to me, I see volume in the candlesticks, right? So I can put a volume graph at the bottom down here. I could put a volume so I can see where the volume is. And a lot of times they'll tell you that the volume increases as the stocks are moving up, and that's true, and that's what you want to see, right? You want to see more people participating. But I could see volume within the candles, right? If you see a big red candle like that, that's a lot of volume that pushed this down, right? That's a lot of volume that pushed it right back up. So that's how I use volume. But no, I don't watch a volume chart. It doesn't help me. I try to use as less indicators as possible. Why? Because all they do for me is confuse me. All right. Again, what I'm trying to trade is double tops, double bottoms, or higher highs, higher lows. All right. Here is obviously a break and go. So if this is break and go, my thought is that the market's going to continue higher. All right. But it's going to pull back. Right. And everyone's looking for a pullback. It's going to pull back to a certain point where people are going to be interested in buying. And where that point is, that's probably the 20s, probably where VWAP is. That's probably indicator. So it's going to come back a little. I kind of tell that's what's going to happen, because it needs to get more people interested in buying and going long again. And that's what it's doing. It's pulling back again. Let's just see where it goes. Now, if it would just scream all the way down to VWAP, I would buy that. Right? I'd buy that knowing that it's most likely going to go back up. Right? That's somebody that came in with a big order and hit a lot of stops. But as you can see, it's just, today, again, it's moving slow. It might be because of what's happening with the voting, the certifying the votes and everything that's happening up there in Washington. Yeah, I'm not listening to any news right now. Um, but if I wasn't on this live, I would be. You know, I'd go to YouTube and I'd be watching one of those news channels just to see how that's working out. And so we're coming right back down to that line again. Does it bounce from here? Yeah, it could. Or it could continue to go down. $5.98 mark. So I'm going back to my option chart. $5.98. I'm gonna. And I just moved over that option strike price to my active trader, so that if it does come back down here, and I have a desire to buy back into the market, I can at that point. Yeah. See, people think it's on its way down, right? Yeah, but it's going to stop. And where would it stop? Right here, right? That's normally the first point it would stop. So then what does it do? Well, it obviously tries to turn right around and get people thinking that it's we're going higher now. Well, are we? Or is that just to fake people out? I don't know. You never really know. You have no idea, right? But you're looking for, again, probability. What's the probability that that's going to go back up to the to that 599, right? The high. That's its job. That's the market's job right now to get there. All right. If it fails, then it's going to come back down to VWAP. It's going to go right back down. So where are we at? In this whole from here to here, we're in the middle. Don't diddle in the middle, right? Because that's what can happen right there. You think it's going up, and then it turns right around and it continues to go down. And it's desperately going down. So no, I haven't made a trade yet. Kind of just watching the market at this point. Again, where would I be more interested in buying? Well, if we make it back down to VWAP, I might take a stab at it. If I thought the market was going to go back up, and that could play out today before I'm ready to pack it up. But we don't know. So I'm gonna try to get in here the my HR side, right? As we kind of watch the market to see what it wants to do, and this has to do with notifying your employer of your intent to retire if you want to retire, and or if you're going to quit your job, right? When people ask me that, and again, they say, where is this coming from? Well, I got a master's degree in human resource management, and I spent about 20 years working as an HR manager, HR director for various companies. All right, so that's where my expertise comes from. So when people want to either they're thinking of quitting and or they're going to retire, and they say, hey, Robert, when should I notify my employer? Well, I'd always tell them the first thing you want to do is you want to go back and take a look at your employee handbook, most up-to-date employee handbook, because that handbook is going to it's going to outline specifically uh, what you're required to do, right? It's going to tell you everything you need to know. And you really got to understand that before pull that trigger and you go tell your boss you're going to retire. You tell your boss you're going to quit. Because then other things can happen that go against you, right? Just like the stock market. So you want to know what your responsibilities are. So it should tell you how much advance notice, right? Most policy says, hey, give us a 2-week notice that allows me to get somebody else in there, get them trained up. Normally they'll ask you to do the training, right? Train your replacement. And sometimes that's not a good thing, but it'll say a 2-week notice, or if you're retiring, a lot of times it's a 30-day notice, and that all depends on where you work. If you work for the state or federal government, oh man, they got a lot of red tape there, right? There's a lot of. Sometimes they say, you got to give us 5-year notice, 1-year notice. It just depends on what your employee handbook says. A lot of with the states, it's just regulated, right? Everything is regulated, and so you want to make sure that you're in compliance with all that, as well as your private companies. It's not regulated, but they have policies, and not only do they follow the policy, right? They want to make sure that depending on what state you're in, that their policies are in line with state requirements. All right. And so you go back and you want to read. I'm going to do something here. You want to read your policies, because it's going to tell you everything that you need to know. And if you don't have an updated one, you need to get an updated one. A lot of times, those things are online. Okay, it's already come back to test this. 50% test. Does it go higher? 50 chance that it goes higher from here. But it looks like it wants to, right? It moved up, made that big move, created this gap right here. And so they came back, they filled that gap real quick, right? And so at this point, you're trying to decide, well, and it's still feeling that. You're trying to decide if it's going to move and if it's going to break out, if it's going to go higher than this. Remember, I said my goal was to get up to 600, 601, right around there. Yeah, that's where I'd like to see it. Let me see here. And see, when you talk about volume, you could see where it came all the way down here and they bought it up, right? That's a lot of volume. That's a lot of buying, a lot of volume, a lot of buying, a lot of volume, right? Pushed it all the way up. Those are the things that scalpers would look at, right? They go, okay, yeah, it's pushing up. I buy and I sell right here, right? And you can see the market pulling back. Those folks are selling right there, all right? Who are they selling to? People that thought that, okay, yeah, it's going to move higher. And it still might move higher, but they're still going to sell. And that's what they're doing. And so now we're testing this again, right? 1, 2, 3, 4, 4 times. They say the The more times you pound on a door, or you pound on resistance, at some point it's going to give away, right? At some point it's going to break, and you're going to be able to go in. But it's just not this time. But now you kind of see where the market is trending, right? It's in this channel. Come down, come up, come down, go up. What's it most likely going to do? Come down, right? Because it's in a channel. That's the channel that is in. So that's a difficult part of trading, right? Is you're looking, you know what you want to do. I want to go long, but I don't want to go long unless it comes all the way down and touches the 20. If it does that, then I would consider buying at least one contract, right? Thinking that it's going to go back up. That's what I would do. All right, so we're still talking about retirement or quitting your job. I said, hey, the first thing you need to do is just go find your handbook and start to read your handbook, because it's going to tell you everything. It's going to tell you, what the advance notice is. Not a lot of times people would tell me, yeah, but you know what? I noticed that when people quit their jobs, normally the company will let you go. They'll fire you, right? Let you go because they don't want to give you access to whatever, or they think that you're the type of person that's going to create chaos. And so they'll just let you go whenever you give your notice. Now, if that's something that then you know what? You don't give notice at all. Nothing says you have to give notice. But in the policy, it might spell it out. It might say that, if you fail to give notice, then we'll make you non-rehirable. Those are some things you got to think about, because I always say never burn a bridge, right? Because if you burn that bridge, you folks, and you go get another job, or if that next company has to call your previous company, they're going to ask for employee verification. And they just might say, hey, Robert, can you tell me about Joe? I say, well, Joe didn't give notice. He just quit and left, right? It's never been a great employee. And although, some states, they have laws that say that you can't do that, it still happens, right? It still happens. So I just say, never burn a bridge, because you're always going to need that previous company to, say good things about you. So you always want to be in compliant, right? You always want to be in compliant with your policy. So always read that. So I'd always say, you know what? You always want to start by doing it in person, right? Schedule a meeting with your supervisor, and you go in and you talk with your supervisor. Hey, you know what? It's been great working here. It's just come a time where, I'm going to call it quits, right? I want to give my 2-week notice, right? You want to have that conversation, as well as you want to have it in writing. You just go online. There's so many templates out there that you can use, but all you have to say is, as of this date, it's my last final work day, I'm quitting. You don't have to tell them where you're going to go work next or anything like that. They'll always ask, where you going, right? And so the market just popped up. So it's made another higher high. And that's looking good, right? Looking good for the coal side of things. It's on its way up. Nothing wrong with that. So we'll see what happens after this 1 minute candle, which has about another 15 seconds left in it, to see if it turns. See, if you're looking, you can see that the sellers. You talk about volume. You can see the sellers coming in there and selling it down. All right, selling it down, but I don't think they're going to be able to stop them. I think they're, this is a strong market. They're gonna push this thing up. They're definitely going to push it up. At least that's my thought. Right, that's my belief right now. Although, it's just it's not a great place to buy in. Now, there are a lot of traders out there that trade breakouts. So they would say that, hey, maybe this is a breakout, right? It's come 1, 2, 3, 4, 5, and now it's breaking out. And that's when they'll buy. They'll buy the breakout, take it to 600. And sometimes that's a winning strategy. Sometimes that's a losing strategy. You just don't know. All right. So I'm just watching it. I'm watching it. Not a lot that I can say. Right. Just not a lot that I can say about it. But I'll go back to talking about notifying your employer of your intent to retire or to quit. So here you read your handbook, you're ready to give advance notice, you scheduled time, you went in, you talked to your supervisor, you gave them a written notice when your last day is going to be. All right. So some of the things that when you go read your handbook, what you need to look for or verify is when do you get your last paycheck? Normally that is not that day. Some states require that day to pay you. Most of the times, depending on again what day you're retiring or what day you're quitting, you'll still have a final check coming. That final check will be, everything that they might owe you. All right. So just know when that would be. Know when you're going to get that final check, and then know when your medical benefits run out. Right. Uh, most places, most companies, your medical benefits run out at the end of the month. Right. So I always tell people, if you're going to quit, you're going to retire at the beginning of the month. That way you have the rest of the month with your medical benefits. You can go get some things done, right? But you want to read the policy and make sure that you know when that is, because they're going to take out the cost of those benefits in that last check, right? That money is coming out. So you just want to make sure that you verify that, right? When that is, when your benefits stop, and then depending on what you're going to do next, right? They'll offer you continuation of medical benefits, right? Cobra. Now it's going to cost you because in most policies for the company, there's a split 80-20, right? And that's what the companies always try to get to, where they pay 80% of the cost and the employee pays 20% of the cost. All right. Now, when you quit or you retire, and if you're going into Cobra, you might have to, and most likely will have to pay everything, right? 100% of the cost of your medical benefits. And that's why not a lot of people take Cobra. Or some people will get it in writing to where uh, they get the company to pay for that Cobra for them for like 6 months. And that just depends. But just know your medical benefits, when it stops, and then what other options you have. Now, if you're going to retire and you're retiring at 65, what do you have to look forward to, right? Medicare, right? And I'm currently on Medicare, and we'll talk about that a little bit about that in a second here. But the next thing you need to consider, right, and that is your vacation pay. All vacation time earned but not used, they should pay that out at that last paycheck, right? Because you have earned those hours. They cannot hold that back. By law, they cannot hold that back. You've earned that. So they have to pay that out. but you want to ask those questions. You want to make sure that you get that. Then there's sick leave, sick pay. Most of the times you earn X amount. It might be 1 day a month of sick time. Normally, those are not paid out. All right, those are usually use or lose. And so, what do you do there? Well, I normally tell people, hey, look, if you have some hours, utilize them. Utilize them before you have that conversation with your boss. Right? Take some time, do what you got to do, because again, those are something that you earned, right? That is yours. You might as well use them before um, before you terminate and they take it all away. Now, if you could see what it's doing here, right? It's hit this many times, it's broke out, and it's come back. So break, and it's retesting. It's retesting the same level. This was resistance on the way up. Now, does it act as support? We'll see. It looks like it wants to act as support, and if it's going to act as support, that's a great place to buy in. Now, this could be a fake out, though, right? But we'll see. So it's break, retest. Now it's support, and do we go to 600? We might. We just might. Okay, so you checked on your vacation, you checked on your sick time, you got all that straightened out. Take a look at if you got a 401. All right, know when you can roll that over. Most of the time, if you got a 401 and you retire or you quit, as soon as that company, which is managing your 401, once they receive notice that you have terminated, then you have the options to do a couple of things. One is you could just leave it there, right? Leave it right there with the company. If you're satisfied with that company, then leave it right there. If you're not satisfied with the company, then you could roll it over and roll it into an IRA. I have one here with Thinkorswim. That's where my IRA is, and I use it and I trade with it. Right? I trade with my IRA, and I can do those things. But just know about your options with your 401 if you have one, and understand what the requirements are to get that rolled over to something else if that's what you want to do. And last there is you talk about the life insurance, right? Because you got insurance, your life insurance. I think nowadays they made it to where you might be able to take that with you. And if that policy, if you can take that with you, it might be something you consider, especially if you have a family. Because if you have a family, I got a $200,000 life insurance on me. Yeah, don't come kill me now, but that's not a lot of money. 200,000. So if something happens to me, then my wife has a couple of dollars to keep on living until she figures out what she wants to do with her life. Right? I always tell her that she can go find another man that has a whole bunch of money, and she can have a good life. Right? Although she says that she ain't doing that. But know what you want to do with your life insurance and policy. And then still under insurance, we're talking about Social Security now. So if you are retiring and you're hitting 65, you're entitled to Social Security at that point. And so what do you got to do? Well, you should have an account with online with Social Security, right? You want to, even if you're not retiring, you should have an account, because every year, they collect all your pay data, which every year that they could tell you how much you made that year, and you want to make sure and verify, make sure that amount is correct, right? That there's no mistake there, because that's going to tell you your benefits once you actually retire. And so you want to make sure that is accurate every year. And then if you are turning 65, go check it out. And you could start that process to draw Social Security at that point. Now, with me, what happened is, they did it automatic. they were Social Security benefits. They were reaching out to me saying, "Hey, you're turning 65. Uh, you're entitled to Medicare. Uh, blah blah blah. Here's what it's going to cost." Now, when you talk about Medicare, yeah, there's many parts to it, right? So there's Part A, which is hospitalization. Normally that's free. Uh, and then there's Part B, which covers, when you go to the doctor's visits and all that. That's not free. In 2025, I think it's $185 a month now. So so it's not free, and that's something you have to consider into your overall spending, right? $185. That's not chump change, not for a retiree, not unless you made the big money. So consider that into your plan if you're retiring and you're 65, right? Know all that information before you even go talk to your boss. Now, if you're in the federal or state government, a lot of those departments, they got career coaches or retirement managers that you can go talk to, sit down, and they'll tell you all this, right? They'll tell you about all these benefits and what you got to do. So they'll help you out here. Now, if you're not with one of those, well, if you work for a private company, you're not on your own. You just got to do a lot on your own and do some research, right? Try to figure things out. And then let's talk about your last day of work, right? Last day of work, it's your last day. If you're retiring, hopefully they'll have a retirement party for you. If you're just quitting because you're going to a better paying job, just note that, you got to turn in all your required equipment, right? Because there's a lot of things that say, if you don't turn in this or you don't turn in that, they might hold that last paycheck, and you don't want them to hold your paycheck, right? And you don't want them to talk bad about you if you're going to apply for another job somewhere. So you want to turn in all your required equipment, like your cell phone, if you have a cell phone from them. Maybe it's a laptop, maybe it's keys to the building, maybe you were given ID cards, or maybe you have a company credit card. You want to make sure that those are closed out and turned into your supervisor. And then lastly, you want to make sure that your office is clean, right? Take all your stuff, put it in a box. You don't do that within that 2-week notice. You want to grab all that stuff and take it home, right? Get it out of the office, right? And I say take it home, but one of the videos that I made had to do with the first thing that I did when I retired, and that was declutter. And so I say, all that stuff that you kept bringing home over the many years that you worked, it's time to get rid of all that, because you don't work for them no more, which is the same thing. So, if you're leaving your work, going somewhere else, no need to take all that stuff, especially if you're retiring. You don't need to take all that stuff home unless if it's kind of like a trophy or something for you. Best thing to do is just to throw all that stuff away, because you don't want to clutter up your own house. All right. So clean out your office so they can't say that you left anything there that is undesirable. And those are just the considerations that I think you need to consider when you're contemplating notifying your employer that you're going to retire. If you're retiring, you work somewhere for 20 plus years, it's always going to be on a positive note, right? But you always want to go through and make sure that you answer all these questions that are going to have an effect on you once you leave. Because once you leave, I always say, if you don't have a job, you don't have a title. So you might have been somebody at some point, but once you retire or once you leave, you're nobody, right? So you want to make sure that all that is taking place. All right. So, I think I'm going to make a separate video on this and put that out today. So I'm still watching the market, right? We're still in that channel. We're still in that ditto in the middle, right? There's still really don't know what it wants to do. I still believe, and I think it's going up to 600, but we're already up, over 1%. Yeah, over 1%. So the probability, and we're back at that resistance, right? We came back down. The market came back down, right? Everyone thought it was going higher, then it came back down. You see it how it just touched this trend line, retest the trend line. So it comes back down, right? Broke through what we said was support, right? So that support ain't that strong. And now it now becomes resistance again, right? Now it's resistance again. Now it's causing some resistance there. 1, 2, 3, right there. So what's the probability? I don't know. I couldn't tell you. I don't diddle in the middle. We're at highs right now. If you're at the highs right now, you would think, or you would expect the market to pull back at this point. But this is a gap and go, where if you look, so we gap down here, right? Let me put this other one up here. All right. So if you look down here, that's where the market closed on Friday. And then today it gapped all the way up. And then it just continued to go up higher, little by little by little by little, right? Very little. Which again, I prefer to if I'm going to go, the market's going to go to a place, I want it to go to that place now, right? Not like this, little by little by little, because every time it comes back, I lose value in my options, and it goes up. It's not going to go up to the highs of where it was, the option wise, the value of that option. As it pulls back, I lost value, and then when it comes up here, it's not going to be the same, right? You might be a couple of cents shorter now, and then it's going to pull back again. Now it comes back again. Now you're a couple of cents shorter again, right? So that's why I don't like slow markets. Let me fix this up here. And I apologize. I was hoping that I'd get a good setup today, and I'd be able to make a good trade, and I'd be able to show people, that it's possible to make money. Much like on YouTube, they'll come out there and they'll say, "Hey, here's how much money I made after I was monetized. After my first month." Those are all so positive videos. It inspires you to want to keep going. You go, okay, it's possible they made $300. It'd be nice to make $300, extra $300 this month. Yeah, that will go a long ways to doing something. But if I was saying I was hoping that I was going to be able to make a trade today, so you can see and you can say, hey, you know what? Hey, Robert's not joking. He made a couple $100. That's a good thing. But unfortunately, it just didn't set me up here. Now it looks like the market's going to want to go higher from what I'm seeing. Maybe we're going to get it support again. Because that's what we're on. We're on support, live support. And so do we move from here? Again, we're at the highs. So if you're at the highs, does it go back down? There's no telling. You don't know the probabilities at this point. So we just keep watching. I mean, that's the only thing that you can do. Is just keep watching and waiting for your setup. So my setup most mornings was for it to come back to VWAP, or come back to the 20 when we were way back here. Obviously, it never did. We did draw this line here, and we said that if the market comes back, it's probably going to come back to here, but we want to see a lower low, right? There's the higher high, there's the low, there's the high, there's the low, then it keeps going. Then there's a double low, right? Double bottom, and then it moved back up. So what I wanted to see if the market was going to go back down was it to break this, and so you start to have a lower low, but it didn't give you a lower low. It basically gave you an equal low, and that's very positive for the market, right? That might have been the place that I would have bought, or that I should have bought, right? Was right there. Let's see if I could change that color here. Let's make it white. I should have bought right there, because if I bought right there, that might give me a couple of dollars, but that would have been a double bottom, right? You would have had a double bottom right there. And so, as they say, you know what? You live and learn, right? You learn and you see it. You go, oh yeah, that worked there. Probably what I should have thought about. Here you go. Let's see if the market's going to go higher. It's going to make another high. Yep, and it sure just did. Again, so what you're seeing was the market come up to here, and what did it do? It starts to trend, right? Down to here, up to here, down to here, up to here. It started to come back. People thought it might have come back down to here, but what it did, it did what people didn't think it was going to do. And it's going higher. You know, I keep looking for a way to get into this. Although we're coming to the second hour. Let's look at our hourly charts here. See what that looks like. Okay, so there you go. On the hour, you're making higher highs right now, right? And that's the hour. All right, let's break it further down. Let's go to the 30-minute. Here's the 30-minute. So this 30 minutes, there's a higher high. That's another higher high there. All right, and not quite yet, or yeah, it's made a higher high. All right, you can look at the ticks. It's made a higher high and has come back some. So it just continues to go higher highs, right? Let's break it down. Let's look at the 15th, the 15-minute chart. Higher highs again. Yep, and that's what that looks like. Now, a lot of traders on the 15 minutes, they'll look at this. Okay, this is the 15-minute. Then from here, if the market goes higher, that's positive, right? So I'm going to just put a thing here real quick, and we'll change its color just so that we can talk about it, because they do. We'll put yellow, and we'll make it. Whoa. Okay, yellow one more time. I wanted to make this so you can see it. So the yellow there. So one strategy is to play the 50-minute breakout. That means you wait for the first 15 minutes, and normally I do that, right? I wait for the first 15 minutes before I make a trade, and then after that, there's a high and there's a low. So this is the 15-minute breakout, so you can see where it's broken out, right, out of this range, and it's gone higher. Right now, it could break down to the downside, but what it did, it broke to the upside. And so a lot of traders will wait that 15 minutes, right? Draw that line right there and say, okay, if we go higher from that line, then I'll get in. And you can see where they could have gotten in at some point there, but you know, you have to stop and you have to consider. So, do I wait for the candle to close, or can it be as soon as it breaks? Right. So that's something that you have to write into your strategy. I always like to wait for candle closes. All right, because the candle is going to tell you, and then it's going to change. Just like here, it changed, and you go, okay, well, that really wasn't the place to buy. All right, and then you waited here. Um, the market started to go up. So here, if you waited, you would be way up here at the time. So just something to consider. All right, but a lot of traders will trade or play the 50-minute breakout. As soon as it breaks the 15 minutes, they buy in. And if they did that here, you know what? They're making money, right? They're making money. So let us go back to the 1 minute mark. And as you can see, and yeah, it's broken out, it's come up, hit, we're going. They are definitely moving this. Extend that to the right there. Remove some of these lines, because too many lines, and then you forget what they really meant, or why they're really there. All right, so market, what are you doing? It's going to go to that. Yeah, see how it, bam, their support moves up 2 minutes, two candlesticks, and now what does it do? Does it come back? And that's how you kind of lose money, right? What I prefer to see is just, if it's going to go to 600, go to 600. If it goes this slow, back and forth, chop, 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 you kind of lose money, right? You lose money. And I'm not into losing money. So we know right now. Let me see. We know right now that is kind of support. All right. Remember we talked about break and retest. Okay. Then it broke, retest. You thought it was going to go up. Some people thought it was going to go up, but it actually came back down through this mark here, to where we thought that there was resistance, and we were hoping that it was going to become support, but it broke through that. But it worked its way right back up. All right. So now, is this still support? It's a good question. Next time it touches that, you will find out, right? You will find out if it is. All right. So let me see. Let's let's look at the day. See what that looks like. Okay, on the day you could see where this is the gap, right? This is Friday. It gapped up and it just continues to move up. And it looked like it's wanting to close this other gap here. And that gap is right there. I'm going to make this green. That's a gap right there. You can see how when it make the highs and it ended right on December 26th, right? And right there. And then the following trading day, it came back, right? It gapped down. So this right here is a gap. So remember we said that gaps are normally closed, not normally closed. Gaps are always closed. At some point they close. And so you can see where that green line, let's go back to the 1. So that's where that gap is. That's the gap closed right there. So does it close that gap and then turn around and come back? Well, that's possible too, right? Everything is possible, and it's hard to tell. Now see, it's got some volume there, right? It's pushing that down. On the East Coast, it's 11:25, so it's kind of close to lunchtime for them. Okay, so you see it go. You see what it's doing. Oh, and that's positive right there. That's a positive candle if you can get continuation to where you say you saw it go all the way down, and then somebody or some buddies they came in and they bought that back up. But can you get follow through? Can you get follow through right there? It looks like it might. So its goal is to get right back up here again. All right, right back up, get a double top at the gap close. And it looks like that might be where it's going. But this is very positive candle. It's almost like this one, right? So went down, somebody bought it back up. Went down, somebody bought it back up. Went down, somebody bought it back up. Went down, somebody bought it up. Went down, somebody bought it up. So you can see there's a lot of buyers here right around this level. They want to push this up a little bit more. And it might be to create that double top. I don't know, but I'm watching. Because that's the only thing you can do is watch, right? What else are you gonna do? You're gonna watch. My setup was way back here, right? My setup was I needed it to come all the way back down. I needed that good pullback before it went back up, or when it got to 600, 601. But excuse me, it didn't do that. That it didn't do. It actually just that's probably the double bottom, and it just made another higher high. Now we're at 599.50. Man, you always hate when you see the market going up or going in the direction that you want it to go, but you wish you were in. Because it's easy to say, hey, I think it's going to go to 600. Right? And it's another thing that if you put some money on it, but just depending on where you bought it, if I bought it like here, in this candle saying, okay, we're going higher, I would have been stopped out, right? I would have lost money there. So your entry points are most important, where you enter the market. All right, so we're right back at the double top, the close of the gap. Let's see what it does. Let's see what it does here. And it's stalling. You can see where it right here where they're selling it. Let's see if they could break that seller. Okay. Okay. Couldn't break the seller yet. By the way, it looks like from everything that I'm looking at that the live is working out. You know, I'm not struggling to find what to talk about, because you know when you trade you could talk about anything, right? You could talk about the weather, you could talk about all the cold snow that's up north, not north, but in the middle of the country. It's cold here. It got below freezing here in North Fort Worth, right? It was below freezing, um, but no snow. But they said, hey, you know, before the week's out, we might get some. If I get some, I'm going outside and I'm making a video. I'm going to make a video of the snow falling down. That will be pretty. Yeah, it has snowed here in the past, right? Normally at this time of the year, I'm wearing shorts already, but as you can see, I got long sleeves on. All right, it's cold in the house. I don't want to turn on the heater too hot. That power bill can go up. But I do have the fireplace standing by in case the power does go out. I could just fire up my well, look at that. The market's breaking out. I could fire up my fireplace, keep us warm. And here, if you can see down here, right back here, I do have a portable air conditioner heater that I could use. What I'm looking for, what I'm in the market for is I'm looking to buy a generator that could be powered by solar, that I could use just to power this portable heater air conditioner. In the winter, that could keep us, you know, we could go in our bedroom and turn this on and stay warm in the bedroom if the powers were all out. That's fine. We don't have to go nowhere. Or in the summer, when the power goes out, you know, turn on the air conditioner, keep us cool. We're good as the temperature is right. You know, we could just sit there. We don't we don't have to watch TV or anything like that. We could be good. Um, Most information we get it right on our phone, right, from our neighbors. So I'm in the market of looking for a generator. I'm just not sure. I'm kind of leaning towards the Blue Eddy. Um, they have some that you could power with solar, and that's what I like about it, right? So in the event that things happen and you can't get gas, or you can't get natural gas, you know, if I could power it with solar, to me that's golden. I could take that anywhere then. So that's what I'm looking to do. That's part of my retirement lifestyle, which is, you know, age in place. So as you can see what the market did, right? It pulled up and made you believe that it was going higher. It's going to 600, and then what did it do? You had you had a strong pullback, right around the lunchtime hour, and we just hit the next flip, right? Let's go to that 1 hour, and you should be able to see it there. Okay, this is the 1 hour mark. I should be able to see it, right? And so in the 1 hour, we've made higher highs. All right. So that's the first hour. Here's the second hour. And the third hour, it's turning red now, but the third hour, your flip, and you'll see what's going to happen in the third hour. There's 1, 2, 3, and we'll see. Let's go back to 1 because I'm curious to see where this is going to go. And right now, you can see the trend line, right? So that's the kind of like the trend. We know that the market structure is up, right? It's going up. And we always look for some pullbacks as the market goes up. Now we might get into this next channel, which if it goes up to here, if it comes back down to here, then it starts one of these things that, it's just making another channel. It's building steam for that next move. That's what it's trying to do. So we know we have closed the gap, so that's done. And I'm going to go back to the day. I just want to see what that looks like. So on the day, you see we've closed the gap, right? The gap was here to here. We moved up. We closed it, right? So the gap is closed. Now, do we go to all-time highs? Well, that's a possibility. So let's look at what the market looks like, right? So this is a daily chart. So it's come up, come down. It's created this gap here, right? It's come down. The top of the gaps becomes support. It goes up higher. All-time highs, 609.07. Then it starts to pull back. Pull back. It can't get back up here. Pull back some more. Oh, excuse me. Pull back some more. Then you have this huge move down, right? Huge move down. Following day, it tries to recover some, but it can't. Right? The following day after that comes all the way down, right? Comes further down to try to close this gap. Everybody thought that it was going to go all the way down to close this gap, but it didn't. Now some would say, the gap is right here, right? From here to here, there's the gap there. And is it closed? No. And so what happens? The market starts to move up again. Now, those gaps doesn't happen right away, right? Sometimes it takes time. But you can see the markets come back down again. So here's where that double bottom is, right? Double bottom, especially on the week. But for the day, double bottom, and now it's moving back up. All right, so there's a gap down here. There's a gap right here. There's a gap right here. We just closed this gap here. So, Mr. Market, where are you going? Well, maybe to 602. But what I was looking for today was to get to 600, 601. Kind of where I thought it might be going. And you can see it's looks like it's trying to get there. Does it make another higher high? Or does this pull back actually bring it back down. This next pullback. I don't decisions. As you can see there, there's a lot of time in between waiting for your setup and actually taking a setup. Like I said, a lot of times I don't even take a trade simply because that setup ain't there. I already missed it. I probably should have bought here. And if I bought there, then I could have just held, right? But it's always looking back, and you can see and you go, okay, well, that's easy to do, right? Looking back as you already seen what it did. But if you would have bought here, what will happen if the next candle was actually going down? Well, you get stopped out. Well, that's part of trading, right? You look for the best probability of the market moving in the direction that you want it to move. And then you just got to figure out where to buy in at. Now, a lot of times you could look at larger time frames, and a lot of larger time frames would tell you, different things. So I always watch the 15-minute. I like watching the 15-minute. And if you watch the 15-minute, like I talked here, the breakout, you can see it going higher, 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 equal high, but you did push higher. No, higher here, higher here. That's already higher. So I wouldn't be negative to stock market at this point, unless I got down below one of these. Now, if I made a lower low, and I haven't seen a lower low here, if I made a lower low, then I would consider buying puts. But we're not there. The market just steadily going up. Market's strong. And remember what I said about your calls and puts. Where are they at? Well, there are more puts than calls, right? More people keep buying puts, which means what? Which means sometimes the market's going to keep going opposite of what everybody thinks it's going to do. So that's just my opinion, nobody else's. And most times I'm wrong. That's why I always tell people, don't follow me, right? Because if you follow me, you're going to lose your money. If you follow my trade, you're going to lose money. All right. I trade, and if I lose money, that's okay. I'm prepared to do that. But I have a tendency to make money versus lose money because I'm a patient trader. I can go the whole day and not make a trade. That's okay. I know one good trade can give me $1,000 this week. Can you use an extra $1,000 within a week's time? Yeah. So if I'm patient, if I'm wait for my trade, don't have FOMO, then that possibility is there. And so I'm willing to wait. And if I don't make this trade, then guess what? Tomorrow is another day. And at that, the next day is another day. It's another good trading day. So imagine if you got in and you were short the market and the market keeps going up, now you're left with the decision of trying to decide, man, do I sell? Do I sell and get out of this trade because I just keep losing money, right? And that's never a good feeling. You just say, man, I just keep losing money. But everybody on the internet says it's going to crash, it's going down. So I'll just wait. I'll wait while I'm losing money. I don't like that, right? I rather wait while I'm trying to figure out how to make money. And that's what I'm doing right now, trying to decide where the best place is. Although, it's going on 11 o'clock Central Time, 10:43. I usually go to like 11:30, but a lot of times if I don't make a trade, there's no reason to keep going because there's a lot of other things that I want to do in retirement. Right? I just don't want to sit here and stare at my computer hoping that the market's going to go one direction or another. So if at 10:45, or correction, is if at 11 o'clock, another 15 minutes, if this market doesn't move and go in the direction that I wanted to, or it doesn't give me that opportunity. I like to see it get down to VWAP. If it get down to VWAP and bounce, then I might buy long. I'll still go long. I'm not going to go short. I will still go long. I might buy a trade, but that's something that has to happen within the next 15 minutes. So I shall see if it goes for the next 15 minutes and it gets down to VWAP. Um, I'll buy in. I'll buy one contract and see if that will make me enough money to take my wife to McDonald's. But right now, if you look at it, it hasn't made a new high yet. But all that means is that the market is trying to fake you out, because most traders, we all see the same thing, right? When you look at your chart, you're seeing the same thing. There's nothing different. It's the same. Now we might analyze it, and we might differently, right? We analyze it differently, and we see different things. But we all see the same thing, right? If you're looking at a candlestick chart on the SPY, this is what you're seeing. You're seeing that there's that trend line I just drew, and it's breaking that trend line. So is it going to come back down to 599, which is support, but it's kind of weak support, right? Because it broke it here. It came back down lower, although it did come back higher. And so it support, right? This candle support. So does it come back down with more support? I don't know. I would like it just to drop and come all the way down here. If it did that, I would buy in. So that's one probability, one possibility of what I might do if I'm handed that scenario. So I think what I'm going to do is that most days after the live, I'm going to edit it and just include the times of when I make a trade, because that's all people really care to see, right? They want to know if you made money. So I don't care to post this if I don't make any money. But we did have some people in the room, and so part of why I'm doing this is I'm trying to get watch hours, and so I need to do some more research to determine if I put this on private, or I forget what the other one is, if that takes away my watch hours. I shall see. Because if there's no trade, there's no reason to post this. Ain't nobody going to want to watch this if I didn't make a trade, if I didn't make money or lose money. A lot of times I think people like to watch, especially when you lose money. If you go, oh, I lost $1,000 today, and they'll like to click on that video and see how you did that. Some people love seeing other people's misery. But I don't know. We shall see. We shall see how it works out. But it looks like as far as what's the word? As far as the live goes, it looks like this is working out for me. All right. Yeah, I don't have a lot of people that jump in here and kind of watch, but if there's two or three, or I think we had up to four today, we get that many people that come in and take a look. That's good. But if they stay an hour, that's 4 hours of watch time. You know, uh, and I'm going to be watching the markets anyway, right? I'm going to be doing this anyway, so might as well do it on live and kind of watch it, kind of check it out. There is nothing wrong with that. So I'm very happy with the way the live is working out. I wish I had more monitors that I could put up more of my charts and be able to switch from one chart to another chart so you can see all the things that I'm watching. Because I'm not just watching this one chart, right? This 1 minute on SPY. I'm also watching some other indicators that kind of help me to make a decision of when to buy and when not to buy. There's there's about 1,000 indicators out there, right? 1,000 indicators, and man, I see some people where they'll be watching, 5, 6, 10 indicators, and all that does for me is, make me go cuckoo, right? I don't know. I don't know what's right or what's wrong anymore, because those indicators, a lot of times, they're after the fact, right? They're after the market has already moved. I do have one indicator down here that I watch, and it's the market forecast, right? And I rather not get into it or explain it, uh, but that's just key for me. My whole recommendation is always, find an indicator that you like, utilize it, study it, understand how it relates to the market, how it gives you the edge that you might need in order to make trades. That's what I would say. Hmm. So I'm just watching the market, seeing what it wants to do. I still think we pop up there and we get to 600. All right, so we're coming up to the top of the hour here. And let me see what it does right here.